Hello everyone and welcome to the RBI revision session for the February 2022. So in this session we will be doing the 100% coverage for the notifications, press release, the circulars and the reports for the February 2023 that we have already done in our sessions. Okay, so we will be completely revising the notifications, press release, circulars, reports for the February 2023 that we have already done in our sessions. So I hope today you will be able to get 20 out of 20 marks. You will be able to solve all the questions that through the revision you are able to understand better. Okay. So good morning Shashwat, good morning everyone, good morning Shorish, Sahil. So today let's start with this revision session and I hope you will be getting 20 out of 20 marks. Okay. So before starting with this very important session, there is a big announcement from EduTab that we have brought for you the comprehensive guide to RBI Manager. So all your common queries regarding the examination, regarding the preparation, regarding the organization, all your common queries can be answered through this single guidebook and there are the definitive answers that are provided here. So, and this is absolutely free of cost to save your time, to save your effort so that you do not have to go to different links. You do not have to visit different websites. You can easily download this guidebook. The link is provided in the description box below. So today, let's start with the revision. Okay. So here regarding the digital payment index. Okay. So recently that is on 31st January 2023, the Reserve Bank of India announced the digital payment index for the September 2022. Which of the following statements is or are correct for the digital payment index? So if you know the answer of this question, right, because here all the important points regarding the DPI is being discussed. So if you know the answer of this, then that means you understand about the digital payment index, and I have started getting the answer, and the answer that I am getting from Sorish is E, and that is absolutely correct. So the first statement, the RBI has been publishing a composite Reserve Bank of India digital payment index with March 2019 as the base. So this is wrong. The base is 2018. Okay. So the base for the digital payment index is 2018. So the first statement becomes wrong. DPI, the RBI DPI was launched in January 2021. So that is correct. So the digital payment index was launched by Reserve Bank of India in January 2021 and is published on RBI's website on a semi-annual basis. So that is correct. It is released twice in a year. From March 2021, so that is also correct. From March 2021, the release of the document started to happen on the semi-annual basis with a lag of 4 months. It is not 3 months, it is 4 months. With a lag of 4 months, the digital payment index is being released. So this is the correct statement. That is, there are the 5 broad parameters on which the DPI depends on, and the index for September 2022 stands at 377.46 against 349.30 for March 2022. So all of this we have already discussed. Remember the data for the March 2022 and the September 2022, and the March 2022 data is being released on July 2022 and September 2022 data released on January 2023. So you can understand that the release of the document is happening on the 4-month basis. After the lag of 4 months, the document is being released. Okay. So now this is the other question. Again, from the digital payment index, there was a direct question in the previous year paper, and that's why we should focus on the basic idea of the digital payment index. So yes, with the lag of 4 months. So here kindly provide me the answer that which is the highest, which of the parameters has the highest weightage in the index. We know that there are the 5 parameters, but which parameter has the highest weightage? So here I am getting the answer D, and that is absolutely correct. The payment performance has the highest weightage and the consumer centricity has the lowest weightage. Okay, so I hope you already understand all of this. We have discussed this a lot of time. We have discussed the 5 broad parameters a lot of time. So I hope you know that what all of this means. And the highest weightage is with the payment performance, the lowest weightage is with the consumer centricity. So now moving forward to the other question. Now when the digital payment index was launched, right? Then with this digital payment index, there was much talk about the economic survey, that what the data the economic survey has given. So this is a question that was quite in news. This was a statement that was quite in news with the digital payment index. Okay, so here you need to focus on the economic survey data from the digital payments perspective also. So here I hope that you already know the answer. Thank you, Anil, for the share and like. So according to the economic survey, on average between financial year 19 and the financial year 2022, the growth in UPI based transactions in value and volume terms has been dash and dash. So this data is very important because it was an economic survey, and then again it was coming in news with the digital payment index. So here the data that I am getting is absolutely right. All of you are giving the right answer, and that is so good to see. This is the right answer. 121% growth has been seen in value and 115% growth has been seen in the volume terms. So next, again, this statement was also going quite much with the digital payment index, and I hope that you already have read the economic survey. I hope you already have understood all about the economic survey. Okay. So as per the economic survey, this data I have shown you in my session also, where we were discussing about the digital payment index. The additional information that is provided is also very important. Okay. So as per the economic survey 2022-23, India has the highest fintech adoption rate among the world. You can see in the world there is the global average is 64% for the fintech adoption, but in our country the fintech adoption rate is 87%. Okay, so during the digital payment index session, I have given you all of this additional information that is very important to understand, that is very important to remember, and I hope that you remember these percentages very well. So now moving forward, coming back to our notifications of the RBI, this is the question. Okay, that seems a little typical, but once you read it, it will become very easy for you. So as per the directions released by Reserve Bank of India for the acquisition and holding of the shares, holding of the voting rights of a bank, of the banking companies, this is the notification, this is the master direction that has been released in the 2023. So you have to tell that which percentage, any person means the natural person or the legal person. Legal person is any entity, any corporate. Okay, so they become the legal person who intends to make an acquisition that is likely to result in the aggregate holding of dash percentage. They have to take the prior approval from the Reserve Bank of India. So what is the percentage? So I am getting the answer that is 5% and 10%. So the right answer here is 5%. So here the right answer is 5%. So here I hope you already know that the ultimate ownership of the banking companies, who is holding that? So who is holding that? So that is very important. And for the fit and proper criteria on the for the continuing basis that the banking companies owners are fit and proper. So for those, the RBI has released the notification, the direction for the acquisition and holding of the voting rights or the shares. Okay. So as per the master direction, if a person wants to hold, if a legal person or natural person wants to hold the shares or the voting rights of a banking company, they must have a measure, then they have to take the approval of the RBI for the measure shareholding. Measure shareholding means aggregate holding of 5% or more of the paid up share capital or voting rights. So that's why the 5% was the right answer, that if you want to go above, or if you want to have the 5% of the voting rights or 5% of the shares in the banking companies, you need the prior approval of the RBI. Now coming to the other question, and this is also the question regarding the master direction for the Reserve Bank of India, acquisition and holding. Here you have to tell that as per the guidelines, the promoters can only keep 26%. So this is the limit for the promoters that they can keep. Now promoters are the real owners or the people that have set up the banking company. So the limit for them to hold the shares, hold the voting rights is 26% after how many years? Like after they have completed what years? So when they have set up the company, of course they have 100% of the shares, but they have to go down to 26% of the shares after how many years? So the right answer here is, yes, I am getting all the right answers. That is so good to see. So it is 15 years. So after the completion of 15 years, the limit of the voting rights or the limit of the shares with the promoters become 26%. So be very careful with this. Also, so the 26% of the paid up share capital or voting rights of the banking company after the completion of 15 years, this is the limit. For the people, 10% is the limit, and for the big institutions, financial institutions that are not connected with some business, so they have 15% of the limit. Okay. So during the period prior to the completion of the 15 years, the promoters have higher stakes in the banking company because they have set up the company, right? So they may be allowed to hold a higher percentage of the shareholding, but they have to show the path. Okay, they have to show the plan, dilution plan to the RBI, that how in coming 15 years we are going to dilute our shares. We are going to sell our shares, and we are going to come from this 100% ownership to 26% of the voting rights in the company. Okay. So these percentages, they can be overruled if it is the case for the state government, central government, union territory, public sector undertaking. Then the promoters can held more than these percentages that are specified in certain situations. Okay. So here there is one more important information that you need to know, that if the shareholding is of 10% or more than 10%, but up to 40%, the shareholder has to keep this in the lock-in for the 5 years. Okay, for the 5 years. So for the first 5 years, there is the lock-in that happens if some person, if the natural person or the legal person has more than 10% of the shares and less than 40% of the shares. If the shareholding is of more than 40%, then above that 40%, like if I am holding 50%, if a legal person, because I cannot hold 50% of the shares, right? But some promoters can keep 50%. So if the shareholding is above 40%, the extra 10%, there is no lock-in period, but up to 40% there is the lock-in period. Okay. So now coming to the next question. Recently, in February 2023, on the basis of the assessment of the current and evolving macroeconomic situation, the Reserve Bank of India has raised the repo rate by 0.25%, that is by 25 basis point. So the repo rate has become what? So it is repo rate has become 6.50%. You have to tell that the SDF also increased by 25 basis point. What is the percentage of the SDF currently? So you have to tell that. So yes, I'm getting the right answer. It is 6.25%. This is the right answer. So when the repo rate has increased, the policy repo rate has increased from 6.25% by the 0.25% to 6.50%. The standing deposit facility, see, the repo rate is greater than the standing deposit facility by 0.25% or 25 basis point, and the repo rate is less than marginal standing facility by 0.25%. So if the policy repo rate is 6.50%, the MSF will become 6.75%. Okay, the bank rate will also become 6.75%, and the standing deposit facility is less than the repo rate by 0.25%. So the standing deposit facility is 6.25%. Now coming to the next question, that as per the first advanced estimate released by the National Statistical Office in January 2023, placed India's real GDP growth at 7.0% year-on-year basis, driven by private consumption and investment. You have to tell, as per the gross value addition, what is the on the supply side, what is the gross value addition? Okay. So we have already done everything in the previous session. So I hope you are able to understand everything. Okay. So here the right answer is 6.7%. So on the supply side, the gross value addition is 6.7%. And from the, if we see from the GDP side, the growth is 7%. That is assumed, we can say, that is estimated, not assumed, but estimated. So I hope you will remember these percentages very well. So now, as per the first advanced estimate, on the supply side, the gross value addition is estimated at 6.7%. Inflation is projected at 6.5% for the 2022-23, and the CPI inflation for the 2023-24 is projected at 5.3%. Okay, real GDP growth for the 2023-24 is projected at 6.4%. So these are all the important data points that you need to remember from the exam's point of view. Okay. So now coming to the next question, that is as per the statement on developmental and regulatory policies released by the Reserve Bank of India in February 2023 to provide further impetus to TRADE's platform, their scope of activity has been increased. So which of these is correct? Which of these is incorrect, or which of these is not among the scope of the activity of TRADES? Okay, so here I am getting the answer D. So that is not correct. So here the first statement says the insurance facility will now be permitted on TRADES. So this is absolutely correct. The TRADES is trade receivables discounting system. So where the discounting of the trade receivables happen. Okay, so we have already understood everything about the TRADES. So here the three that has been allowed for the expansion of the TRADES is that the insurance facility will now be permitted on the TRADES. All entities, institutions eligible to undertake factoring business under the Factoring Regulation Act will be permitted to participate as financiers in TRADES. This is wrong statement. The invoices converted into a factoring unit will be completely backed by the government of India. So this is absolutely wrong. This is not the expansion that has happened. Okay. The third is secondary market operations will now be enabled on TREDS platform. So this is correct. So there were only three expansions that were taken by the Reserve Bank of India for the TREDS. So first was that the insurance facility will be provided in the TREDS, but insurance facilities will be provided by the insurance companies. The government is not backing the TREDS, backing the invoices. Okay, all entities, institutions eligible, they can come in the TREDS as the financiers. Secondary market operations will now be enabled on the TREDS platform. So this is all that you need to understand. We have already discussed the TREDS very well, that what is TREDS. It is a platform that we can say where the sellers are coming and they are selling their invoices, okay, for the money, or the buyers can come and they can sell the invoice and they can send the money to the supplier through this. So when the supplier is coming and giving the invoice on the TREDS platform, it is known as factoring. But if the buyer is coming and giving the invoice in the TREDS platform, it is called as reverse factoring. So all of this we have already discussed, this whole process, that how the TREDS is working, we have already discussed. So you can go and see that session and have the clear understanding of the TREDS. But you remember that there are the three expansion measures that has been taken by the Reserve Bank of India that I have already shown you in the previous slide. Okay. So now coming to this question, that which of the following has become the fourth participant of the TREDS? So recently the insurance facility has been introduced in the TREDS. So that means the insurance companies have become a new participant in the TREDS. So of course they become the fourth participant. The MSME sellers, that is the only the micro, small and medium enterprises sellers are allowed in the TREDS platform. So in the seller's case, there is only the MSMEs that is allowed. In the buyer's case, there can be the corporate buyers, there can be the government departments or government ministries, and there are the financiers. So these were the three participants that were present before, and now the insurance companies has also become the participant in the TREDS platform, that is the fourth participant. The TRED operators, they are operating, so they are not the participant in the TREDS, they are overlooking the TREDS. So you have to understand the difference, okay? So I hope here you can see that the insurance companies have become the fourth participant of TREDS, apart from the MSME sellers, apart from the buyers, that is can be the corporate buyers, that can be the government buyers or the government departments or the ministry. Okay, and the third participants are the financials. Now coming to the next question, the Financial Literacy Week was held in February 2023, and you have to tell that RBI has been conducting the FLW since which year? Okay, so the theme for this year was Good Financial Behavior, Your Savior. Now you have to tell since when the FLW has been celebrated or has been done. So it is, I'm getting the right answer, that is 2016. So this is absolutely correct. So since 2016, the RBI has been celebrating, the RBI has been conducting this Financial Literacy Week. For the previous year, the theme was Go Digital, Go Secure. For this year, the theme was Good Financial Behavior, Your Savior. So you have to remember the theme of this year, the theme of the previous year, from when the FLW has been celebrated since 2016. Okay. So now coming to the next question, the theme of the hackathon for 2023 is. So the hackathon 2023, that is the Harbinger 2023, has been celebrated by the Reserve Bank of India. It is a global hackathon that was conducted by the Reserve Bank of India, and this was the second global hackathon that was conducted by the Reserve Bank of India. The first global hackathon happened in November 2021, and the theme of the first global hackathon was Smarter Digital Payments. Now the second global hackathon happened recently only, that is in 2023 only, that is Harbinger 2023, Innovation for Transformation. Okay, so the theme for the hackathon, for the current hackathon, was the theme. So I'm getting the answer inclusive, yes, C is the right answer. Inclusive digital services is the right answer. So remember, the first global hackathon happened in 2021, November 2021. The second global hackathon happened in February 2023, and the name of the hackathon is Harbinger 2023, Innovation for Transformation. The theme is inclusive digital payments. There are the 4 problem statements that has been given by the Reserve Bank of India, for which the solution is being taken. Okay. So the solution, the hackathon is being created, the hackathon is being run by the Reserve Bank of India for finding the solutions for these 4 problem statements that we have already discussed in our session. Go see that session if you do not understand these 4 problem statements, or what is the harbinger, or what is the hackathon. Okay, we have discussed everything. So now coming to the next question, that is, as announced in the Statement on Developmental and Regulatory Policies, this was released on 8th Feb 2023. So it has been decided to allow access to UPI to foreign nationals and the NRIs that are visiting India. So for the travelers, they will be able to use the UPI. So you have to tell that which of the following is the correct, is the incorrect statement. Okay. See, I'm going a little fast because in the examination, you have to give the answers very fast. Okay. So you have to understand the, I hope that you have already seen all the sessions and you understand all the news articles. So as per that, in 30 seconds, you should be able, in 20 seconds, you should be able to just see the question and give the answer. So you have to become fast, right? Because in the phase 1, you have to be fast for the general awareness especially. So to start with, this facility will be extended to travelers from the G20 countries at select international airports. So this is correct. This is, for the start, it is only the facility that the travelers of the G20 countries will be getting. The second statement is UPI family facility extended to travelers for their merchant payments and the P2P, that is person-to-person payments. So absolutely wrong. It is only for the person-to-merchant payments that is allowed for the UPI. That is for the travelers coming from abroad, because the travelers will be making the payments to the merchants only, and this is expected. So only the person to merchant payments are allowed for the travelers. The decision is issued under the section 10(2), so this is correct. So banks, non-banks permitted to issue PPIs can issue INR denominated full KYC PPI. So this is absolutely correct. Okay. The annual outstanding in full KYC PPIs, the amount outstanding cannot be more than 2 lakh. Okay, at any point of time, they can only keep up to 2 lakh rupees in their full KYC PPIs. That is, full KYC PPIs are the wallets that is linked with the UPI. That is the full KYC PPIs that the foreign nationals visiting India or the NRIs visiting India will get. Okay, so here all of these rules and regulations that was released in February 10, 2023, we have already discussed all these rules and regulations. That is for the full KYC PPIs that the foreign nationals will be getting. The amount outstanding in the full KYC PPIs, it cannot be more than rupees 2 lakh at any point of time. So now next question that is here. Recently the RBI released another notification on 23rd February or 21st February. 21st Feb, the RBI released another notification that is extending UPI for the inbound travelers, for the travelers that are coming in. So here, this is the question. We will see the notification, but I hope that you have read it in the newspapers. So I hope you will be able to give the right answer of this one. So here the right answer, you have to tell the UPI to start the facility for the eligible travelers. There are the 2 banks. I'm giving you the hint. There are the 2 banks that are allowed for the UPI to start the facility for the eligible travelers. So I'm getting the answer E, and that is so good to see that you are following the news. And yes, E is the right answer. That is BNC. That is the IDFC First Bank and the ICICI Bank. They are the 2 banks that have got the permission from the RBI to provide the full KYC PPIs. That is to provide the wallets linked with UPI to the foreign travelers. And the 2 non-bank PPI issuers, they are the Transcorp. They are the Pine Labs Private Limited and the Transcorp International Limited. Remember one thing, that the UPI One World, this is the name that the RBI indirectly has kept. So the RBI's Deputy Governor and the NPCI's MD and CEO have launched the UPI One World for the foreign nationals that are visiting India, and the Transcorp is the only authority among the 4 entities. Among the 4 entities, 2 banks and 2 non-banks, Transcorp is the only authority that has the license for the foreign exchange also, and that has the license for the PPI also. Okay. So here the RBI has released this extending UPI for the inbound travelers to India, where the RBI has told that which are the selected international airports. So these are the selected international airports. That is the Bangalore, that has the international airport, the Mumbai and the New Delhi international airports, and the These are the 4 entities that will be providing the services to the inbound travelers. I hope this is very easy. We have already discussed everything of the rules and regulations. So this is only the names that have come out. So I hope this is easy for you to understand. So now this is the next question, that is regarding the government securities lending directions that has been recently released in February 2023. So these are the draft guidelines, and which of the following statements is or are incorrect regarding the GSL lending securities? No, these are not the same questions. I have provided you the different questions, you can see, okay? So this is the question. I hope you will be able to easily answer these questions. So we are doing the different questions. So I see the questions that we have done prior, and I try to handle different kind of questions, right? So here, which is the right answer? I hope you will be able to tell. So I'm getting the answer E. And that is so good to see. Yes, the E is the right answer. So government securities issued by the central government, excluding treasury bills, shall be eligible for the lending or borrowing. So the lending or borrowing can only happen with the central government securities, that also excluding the treasury bills. The second statement says that government securities issued by the central government, excluding treasury bills, and the state government securities shall be eligible for placing as collateral. So here the wrong is, here it should be including. So the securities of the central bank include, central government. So the securities of central government, including the treasury bills, as well as including the state government securities. All of these are eligible to put as the collateral. So remember the difference between the two statements. This is for the lending and borrowing. This is for the collateral. For the collateral, all the government securities, let it be the central government securities or the state government securities. So here this statement is wrong, because here the excluding is written, including should be the word. All GSL transactions settle on the delivery versus delivery basis. I am giving you the government security that I am lending you. You are giving me the collateral. So that is how the transaction is happening on the delivery basis. I am providing you back your collateral, and you are giving back my government security that I have lent you. So this is delivery versus delivery basis. This is correct. This is correct. All GSL transactions shall settle through the clearing corporation, that is correct, of India, or any other central counterparty. So this is correct. But here by the Securities and Exchange Board of India is written. This is wrong. Approved by the Reserve Bank of India. Okay, that should be the correct statement. So that's why E is the right answer, because B and D statements are wrong. Okay. Yes. So I hope you have already seen all of this in my session. You have understood all of this. So the eligible securities for the lending or the borrowing is the central government securities, excluding treasury bills, government securities issued by the central government, including the treasury bills, and the state government securities shall be eligible for placing as the collateral. Okay. So these are the eligible entities that are able to do the GSL transactions. Okay. So they are the ones that can get involved in the repo transactions. So in the repo transactions, who can get involved? So it is the any regulated entity, that is the banking authorities, that is the non-banking financial companies that are coming under the Reserve Bank of India, any listed corporate, any unlisted company that have got the issued special securities. So all of these are eligible because they are able to do the repo transaction. All of these entities are eligible for the GSL transactions because they can do the short sale also. Okay, so all of this we have already understood. Remember that which are the eligible participants that can do the repo transactions. So these are the eligible participants that can do the repo transaction. These are the eligible participants that can do the short sale. Okay. So now GSL transactions shall settle on a delivery to delivery basis, and it should happen on the T01 or the T+1 basis, that in the same day you have to give the collateral and you have to give the lending. Okay. So T01 means on the same day the trade is happening, on the same day the settlement is happening. T+1 means trade is happening today, but the settlement is going to happen tomorrow. Okay. GSL transactions shall settle through Clearing Corporation of India or any other central counterparty that has got approved by the Reserve Bank of India. Okay. Now coming to the other question, I hope you will be able to easily answer this question. Here you have to tell the incorrect regarding the recently launched UPI Pay Now linkage. So recently the Prime Minister of our country and the Prime Minister of Singapore, they have been involved, we can say they were present during the launch of the UPI Pay Now linkage that has become live now, as the token has been exchanged through the UPI Pay Now linkage by the RBI governor with the Monetary Authority of Singapore. So which of the following statement is correct? This you have to tell. Okay. So I'm getting the right answer as B, and this is absolutely correct. So the first statement is correct. That is the daily limit of in the UPI Pay Now linkage is rupees 60,000 for undertaking the cross-border remittance transactions through the UPI Pay Now linkage. And here the State Bank of India, Indian Overseas Bank and Indian Bank and ICICI Bank, they can do the inward remittance and they can do the outward remittance also. They can take the money in, they can send the money out. But for the Axis Bank and the DBS Bank, they can only do the inward remittances. They can only take the money in. They cannot send the money to the Pay Now through the UPI. So this is the wrong statement, and that's why this is the correct answer. For Singapore users, the service of inward and outward remittances will be done by the bank, that is the DBS Singapore, and the non-bank financial institution, that is the Liquid Group. They both are being allowed by the Singapore to do this UPI Pay Now linkage. Funds held in bank accounts or e-wallets can be transferred to or from India using just the UPI ID, mobile number or the virtual payment address. What you are doing, you are sending your money through the UPI ID to the virtual payment address of the Pay Now, that is in Singapore. So the right answer here is B, because that is the incorrect statement. So receiving remittances, sending remittances, okay, we have discussed all of this, and this is very cost effective, the linkage. As well as for the Singapore, they are the entities that can do the inward and outward remittances. The daily transaction limit is rupees 60,000. That is in a day. Only the Singapore dollars that can be transacted is 1,000. And this is the linkage that is for the person-to-person payments. Okay, this is only for the person-to-person payments. The person-to-merchant payments cannot happen. You are sitting in India. You have to send money to your family abroad, to your family in Singapore, to your son in Singapore that is studying in Singapore. You can send the money, you can do the transfer payments, you can do the transfer of money, but you cannot do the person to merchant payments through this UPI Pay Now linkage. Be very clear, because in the traveler's case, what was happening in the UPI wallet, that is wallet that is linked with UPI, for the traveler's case, the person to merchant payments can happen. Here UPI Pay Now linkage, only the person to person payment can happen. Okay, so now coming to this question, I hope you will be able to answer this question very easily. Yes, so here the question is, in the UPI Pay Now linkage, the transactions, only the person to person remittance towards the purpose of maintenance of relatives abroad and gift under the dash are allowed. Under which scheme are allowed? You have to tell that. So here I hope that you have understood that the UPI Pay Now linkage is only for the transfer of money, especially the Pay Now. The Pay Now does not allow the person to merchant payments. Okay, that's why the UPI Pay Now linkage is for the person to person or peer to peer transfers. So here the right answer is liberalized remittance scheme. So of course UPI Pay Now is for what? It is for the remittances. So it is coming under the liberalized remittance scheme. So the liberalized remittance scheme, I'm getting the right answers. So liberalized remittance scheme has the limit. So the liberalized remittance scheme is, first of all, it is only for the individuals. It is only for the resident individuals, including the minors. They are allowed to freely, that is without rules and regulations, they can transact freely, remit up to US dollars 2,50,000 per financial year. So per financial year, they can freely remit, they can freely get rupees 2,50,000. Okay. The scheme was introduced on February 4, 2004 with a limit of USD 25,000 only, and this is the scheme that is not this is not available for the corporate or the partnership firms or the trust and all. Okay. In case of remitter being a minor, the LRS declaration, this is countersigned by the minor's natural guardians. Okay, so I hope you have understood the liberalized remittance scheme. Also the limit you have to remember, because this is the limit that will be followed in the UPI Pay Now linkage transaction also. So prescribed LRS limits will be applicable. So for a year, the limit is USD 2,50,000. That is for the one financial year. Now there was one statement that was given by the Singapore PM, that is Pay Now UPI linkage is India's first cross-border real-time system linkage, and it is Singapore's second because Singapore has also got the linkage with the Thailand. Okay, so in 2021, the Monetary Authority of Singapore has launched the linkage of Singapore's Pay Now with the Thailand prompt pay. Okay, so this was the first linkage that has happened, but for India, the first linkage is with the Singapore only, that is the UPI Pay Now linkage. Now here one thing is written that it is also the world's first such linkage that is featuring the cloud-based infrastructure and participation by the non-bank financial institutions. In this linkage, only the banks were allowed. In the Singapore-Thailand linkage, only the banks were allowed. But in India, the UPI Pay Now linkage in Singapore also, we can see that the non-bank financial institutions are also involved, is also getting involved, and in the future, more non-bank financial institutions, more banks will be brought in this kind of linkage. So remember, it is first cloud-based infrastructure and participation by the non-bank financial institutions. Okay. So now coming to the next question, you have to tell the theme of the report, that is the state finances, a study of budget. So we have already done this report in the January, but we did it by the end of the January. So I thought we should revise it. We should have the clear idea of this also. So what is the theme of this report that you have to tell? In this report, the most important thing is the theme only and the highlights that has been given by the Reserve Bank of India. So the right answer is capital formation in India, role of the states. So this is the theme for the state finances, a study of budget. We have discussed everything about the notification that the RBI has given for this. So here, I hope you have understood that the theme of this year's report is capital formation in India, the role of states. We have also done the highlights that was given by the Reserve Bank of India. We have understood each and every point in our previous session. So you can see that session, okay? So everything has been explained that has been given in the RBI's notification for the state finances report, a study of budget. Coming to the last second question of today's, here India's headline retail inflation rate spiked to 6.52% in January 2023 after witnessing a one-year low in December. So you have to tell in December 2022. So since January 2022, there was the inflation that was above 6%. That was happening, okay, till October 2022. Then in November 2022, we saw that the inflation came down to the 6% mark. It was around 5.88%. And in December, it was at the lowest, that was at 5.72%. Okay. So here the right answer is 5.72%, that is B. So you can see that since January 2022, we had the inflation above 6%. In October also, we had the retail inflation above 6%. In November, it came down to 5.88% and it further went down to 5.72% and it was lowest, one-year low of 5.72% in December 2022. In again January, it went high above 6%, that is the upper tolerance level of our country. Now here one thing that I hope you will remember is this percentage, and I was going to say something I forgot. So I hope you will remember this percentage. And the next question is this: as per the Reserve Bank of India Government Securities Lending Directions 2023 draft guidelines, minimum period of 1 day, the lending and the borrowing can happen for minimum period of 1 day and the maximum period of how many days? So this is the homework question, okay? And I hope you will remember the trajectory, because the trajectory is very important. Yes, I was saying that, do you remember the reason that why it came down to such low percentage? It came down from 6%. What was the reason? It was due to the food items, especially the vegetables, because it was the winter season. So in the winters, what happens that the crops are usually good and the prices of the vegetables are usually low. So due to the low vegetable prices, the food inflation was low, and that's why the retail inflation was also low. So I hope you will remember this, that in November, December, the major reason of the prices going down was because of the vegetable prices being down. Okay, yes. So now I hope you will able to give the right answer of this session. This is the question, homework question, and you have to tell that how many marks you have got out of 20. If you have got 15 out of 20, that is a good marks we can say. If you are below 15 out of 20, you have to revise again all the sessions, or just go through the sessions once, do the facts and figures very thoroughly, because for the phase 1, the facts and figures are the must. Okay, so below 15 out of 20, do the revision of the facts and figures. If you have got above 15 out of 20, that is good. If you have got 19 out of 20, 20 out of 20, that means your revision is very good. Okay, so do tell me in the comment section below that what marks you have got and in which criteria you are landing, as well as your do give me the right answer of this question. Okay, a very easy question, a very direct question that can actually come in the examination. Okay, so do subscribe to our YouTube channel, join our Telegram channel for the PDF of this session. And if you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone. And I hope you will be able to give the right answer. You were able to give the right answer of all the questions. We have already done that in the sessions. Okay, all the questions. So thank you very much. Do tell me in the comment section below that how much marks you have got, so that I can also gauge the problems that you might be facing. Okay, so you can take the suggestions also. Thank you very much, everyone. It was great session from my end. Means it was lovely discussing with you and talking with you guys through the comment section. I hope you have liked the session. Do tell me in the comment section below that how much marks you have got, and if there is any trouble, you can share that also. Thank you very much, everyone.